So Steve, we've got an article up there talking about how European economies seem to be slowing, but meanwhile we have a U.S. economy that seems to be improving. What's going on?
Well, here at home, we have a lot of signals that things are getting better. Job market is improving. Today we got more data on the housing market. Home builder confidence shows improvement. What you're seeing in Europe is the impact of the sovereign debt crisis and the fact that countries in the southern part of Europe are cutting back as they try and find a way to pay their debts. And it's affecting the core of Europe, but the core of Europe still seems pretty strong. We got news out of Europe that the EU and the Eurozone both contracted by about 0.3% in the fourth quarter from the third quarter. Is it something to worry about on the global scale? Not yet. It seems like those areas are going to avoid a deep recession at this point, largely because we've managed to skirt the issue of a major banking crisis so far.
So you're saying we don't have to worry about a kind of Lehman-esque type spiral of financial crisis in Europe?
Well, as a number of folks have put it to me, the sort of Lehman moment picture, the bankruptcy of a major financial institution, was taken off the table for the time being by the ECB, which in 2011 completed a nearly 500 billion euro lending program to European banks. They're going to execute another major lending program at the end of February. Basically, they're giving very low interest rates on 3-year loans, virtually unlimited, to European banks that need it. This takes the liquidity issue off the table, which was largely the reason why Lehman Brothers went down as it did.
Lots of U.S. investors have own U.S. multinationals. Global investors own U.S. multinationals. It's their way to play Europe. What do you do now?
Well, many of the U.S. multinationals, including some very economically sensitive ones, have come out and said that the European situation really isn't affecting them yet. At the end of January, Caterpillar came out and said that they expect a very robust 2012, even with the headwinds of a struggling Europe and a still weak U.S. economy, even though the U.S. is improving. Just this week, Deere came out and said that Southern Europe, where the epicenter of the problem is not a big issue for them from a food and agricultural standpoint. So a lot of economically sensitive stocks, like we would consider food production, agriculture, they're not so concerned about what's going on in Europe right now, so they seem to be able to skirt this issue.